Well, next thing I want to talk about, we're not seeing them as much, T-lock roofs. All right, so T-lock roofs, they're the old school, well, not even old school, what, 90s?
Yeah.
A lot of them in the 90s, and the shingles really fit like a T, so they call them T-locks. Now, that product's no longer manufactured, so the roof, even if it's a good roof, doesn't have hail damage. How do you guys look at that for insurance companies, or what have you
Different
seen out
insurance
there?
companies are, again, they have their own rules, but in general, T-locks are going to be completely ineligible, or your roof is going to be excluded and you're not going to have any coverage for it.
Okay.
So the eligibility question is, can I even get insurance at all on this house?
Oh, so they
And-
may say, we're not gonna do insurance.
Right.
You have T-locks, we don't like this roof, therefore, we're not gonna do insurance on this
Right.
property.
Part of the issue with T-locks is, since they're not produced anymore, if one T-lock shingle gets damaged, then the insurance company is on the hook for the whole replacement of the roof.
So the insurance-
Whereas on a normal asphalt shingle roof, we would repair the spots that were hit if it's not deemed a total loss.
What about 3-tabs? They still making 3-tabs?
Yeah.
Okay, all right, so
Composition
it's,
shingles?
yeah,
Shingles?
it's just the T-locks that are the biggest issue.
The T-locks are the issue because they're not in production anymore, so you can't do repairs. And the thing with T-locks is they lowered the asphalt composition in them, and they got lighter over time. And when they first came out, my understanding is they were actually fantastic shingles, and they had a lot of asphalt composition in them. And then to save money, the asphalt composition got a little bit less, and a little bit less. And since they're all linked on the roof, if the wind comes up and picks up one shingle, that whole row is going to be flying off.
Oh, wow. Okay, all right.
So
it's
there's
just loss.
issues with it.
You guys are just looking at it versus risk and return. So we have this product. So what he's saying is, we may give you insurance for the property, but we'll say, we'll give you insurance, we'll cover everything, but we're not gonna cover the roof. So hailstorm
companies
comes
will do
in,
it that way.
yeah,
Yeah.
hailstorm comes in, you had it damages the roof, it needs to be replaced. Well, it's gonna have to be replaced if you have any damage on a T-lock.
Right.
But in this case, you're not gonna have the backing of your insurance company. Or they could say, 100% we're not gonna cover you, but thank you very much, maybe try this person. And I know this personally happened to me on the building I own. So building needed a new roof and I couldn't get insurance. So
So there's two things to look at if you're dealing with a buyer and they love the house but it has a T-lock shingle roof, they're going to have trouble getting insurance. So at that point, on the realty side, you're going to want to either get it built in that roof's getting replaced by the seller, or the buyer's going to need to probably get an estimate and be ready to replace that roof as soon as they take possession of the house.
exactly. And on the seller side, we want to let the sellers know, hey, listen, this could be a problem.
Yeah.
I don't want any surprises here, but this is something that may happen. We may have issues. So it brings me to another one, electric panels. I know we're seeing a lot of different electrical panels out there. There's some that are notorious for having fail rates. Have you seen anything on your side where the insurance companies are saying we won't protect this, or this is automatically voiding out the policy, we won't issue it?
Personally, I haven't seen anything where we have an issue on eligibility.
Okay.
Adjusters are aware that there are some electrical panels that are not performing to the standard that you would maybe hope, and there are codes that have been put in place regarding those panels being required to be exchanged out if there is a loss that affected that electrical panel.
Okay.
For the most part, the insurance company, if you've got the correct coverages, they're going to bring it up to code if there was a loss.
Okay.
What we don't like to see is the knob and fuse the knob and tube fuse boxes.
Yeah,
we
old
don't
school.
we don't really cover the old fuse boxes at all.
So how do you guys do that? So we get someone that's looking at a whole home, and it has the old school one. They love the home, they want to move forward no matter what. They call, they get an insurance quote. How do insurance companies usually deal with that? Because that's huge. Is that one thing where they say, no, we're not going to cover you at all? Or do they say, we'll cover you for a certain amount? How's that work?
It'll be company by company, but a lot of times they're just going to say this isn't eligible for our company.
Okay.
The insurance companies do have their own eligibility requirements, you have to meet those requirements to, have the option to have that policy.
Okay.
So in that case, it may be something where an insurance company says, we don't deal with those, and you're gonna need to go get a quote somewhere else. And it may even be that, it's either a specialty company that you have to go to, which it's probably gonna make the rate go a little bit higher because you're dealing with something that is inherently more risk than if it had been upgraded.
And what that also means that if you're buying a home with a mortgage, with a loan, your mortgage lender is gonna say, if you can't get insurance, we're not giving you a loan for this property.
Right.
That's the typical route that most people go when they buy a home. They are looking at, all right, we want to make sure our investment's covered. That's why we require you to have an insurance company. If the insurance company says this home is ineligible, we will not give you insurance on it, you just can't get a loan for that property. You got to keep on going and looking for other options, but if you can't get other options, the contract has to be terminated if you want to save your earnest money, depending on how the contract's written.
Right, because the home is technically the collateral on that loan.
Correct.
So they want to know that that collateral is going to be taken care of if something were to happen to the house. So if you can't get the insurance policy, they're not going to be as likely to issue that loan without having the collateral protected.